welcome to everybody. I am Shrija Agrawal, and you are watching the third episode of our series, Future of Dealmaking, Season 2 in partnership with JSA. Before we discuss the impact of the second COVID wave on life sciences investments, I think it's time to do some context setting. As the COVID-19 outbreak has altered the world, we are witnessing the life sciences industry come together and aggressively react to one of the gravest threats of our lifetime. Regardless of current uncertainties, it is clear that COVID-19's long-term market impact on the life sciences sector will be transient, as the industry remains on the forefront of value creation. When we talk to experts, one thing is increasingly becoming clear to me that the future of health will likely be driven by digital transformation enabled by radically interoperable data and open secure platforms. Health is likely to revolve around sustaining well-being rather than responding to illness. Such thinking has essentially meant that health will be defined holistically and investments will flow onto an overall state of well-being, which includes mental, social, emotional, physical, and spiritual health. Not only will consumers have access to detailed information about their own health, they will also own their health data and play a central role in making their own decisions about health and well-being. Private equity sitting on huge dry powder of private capital is being seen as a conduit for economic recovery and one that will play an active role in mobilizing these investments. To discuss this and more, please help me welcome a pretty august panel with me here. I have with me Ankur Thadani, who is a partner and co-head of India at TPG Growth and Rise Fund. He has worked on multiple investments, particularly in the healthcare space, energy and consumer sectors across India and the broader South Asia region. Ankur serves on the board of API Holdings, Solara Active Pharma, Styles Biopharma, RIA Healthcare, Nova IFAF, and Ford Partner Energy. I also have with me Rupinder Malik, who is a partner at JSA Associates and specializes in general corporate M&A, private equity, and white-collar crime practice areas. She is actually very experienced and brings about 25 years of experience to the board across these things. I also have with me Sidharrth Shankar, partner at JSA Associates, who has about 20 years of experience straddling and actually doing complex transactions in the healthcare space. Rupinder, Sidharth, and Ankur, thank you for joining me. I'm glad that we also have a female partner on board here today with me. And what a great time to be living in, to be actually talking about COVID-19 and its impact on healthcare and life sciences. I see this particularly just for the fact that COVID-19 has been such a healthcare crisis. Ankur, just from a capital provider perspective, I think it would be interesting to begin this discussion with you. If you were to tell me that, how has COVID-19 really differed from the second wave compared to the first wave in terms of investments, in terms of portfolio management, what would your insights really be? And talking specifically about pharmaceutical companies, and just a segue from my introductory remarks at how healthcare is changing from moving to responding to illness, sustaining well-being, what has that really meant for pharmaceutical companies from this first wave vis-a-vis the second wave?
No, so thank you, Shrija. Thank you for having me, and pleasure to be on this panel. And I continue to wish and hope that everybody who's seeing this continues to be safe and healthy, and their families too. So, look, we are in the middle of not just a healthcare challenge, but a humanitarian challenge. But your question is very interesting, and Shrija, I'll maybe add a little bit of perspective. I actually genuinely think that the impact on healthcare is not transient. It's actually either a start of a very secular theme, or it is the acceleration of multiple secular themes, right? And this is across healthcare. And I'll give you maybe a couple of examples, right? Technology disintermediation in healthcare. It's not that it only started, when the COVID wave hit us. It has been going on for the last few years in India and various markets globally. It has just got significantly accelerated because of the COVID pandemic, right? China plus one strategy on pharmaceuticals, supply chain. Again, not something that people were not aware of this, were not focused on this, has just become more accelerated because of a number of factors, right? Third theme on life sciences, right? Vaccines, injectables as a product category. Serum Institute has always been this nation's crowning glory, and even emerging markets crowning glory on being the largest vaccine supplier, but just not been able to scale up to the demands of what the world needs now. But what's often not covered is, while you have dedicated vaccine companies, there are a number of biotech CDMOs like Catalent, Lonza, WuXi Biologics, who were historically doing very important molecules in biosimilar space, but have all redirected that capacity to vaccines. Now, we all, I think, have come to the conclusion that COVID is here to stay. We'll have multiple vaccine shots. The demand has had a step change. A lot of that demand has to be serviced by supply, which is still coming on stream, right? And this is not a 12, 18-month phenomenon. This is going to be next many, many years, because what you're guaranteed to see is huge amount of supply enhancement on vaccines, injectables, and other products like that. More importantly, I'd almost be controversial by saying this, that healthcare has almost become a quasi-strategic sector for most countries and governments, because people are realizing that almost supply independence and certainty is as important as any other strategic sector. And I think a lot of countries will make significant investments in the next 3, 5, 10 years to ensure that as more and more healthcare demands come up, the needs are being more and more supplied by onshore capabilities than being dependent on a particular country or group of countries going forward. So I actually see there are multiple themes that cut across healthcare, right, that have been panning out. Just your specific question on what has changed, I would almost say from personal experience, right? Last 12 months has been a great learning experience, right? When the first wave hit on, end of March and April, I think all of us were just taken by shock, right? Nobody knew how to handle this. I dare say that every private equity friend that I spoke to, everyone said, look, let's just now focus on our companies. Let's ensure our companies are safe, right, from a healthcare standpoint, but also conserving cash, cutting costs, making sure they tide through this, because we don't know how long this will last. I think that sentiment in almost 3 or 4 months changed to, this could be a very good vintage to invest in certain aspects, certainly healthcare. Let's kind of proactively go and hunt out deals. And it's not a coincidence that if you look at the number of deals that have happened in India in the last 6 to 9 months, healthcare outside the Jio and Reliance retail phenomenon has been a huge dominant factor, right? So it's not a coincidence that has happened. I think this time around, it's a very different sentiment, right? I think a lot of us agree that's a huge humanitarian challenge. Most of our companies are suffering from, downtime because their employees are not able to cope with COVID, right? And everybody's saying, let's kind of take a pause, let's ensure everybody's safe and healthy, then think about doing deals, right? So it's almost now become a way of life. People have got accustomed to it. I think, become agile and have realized that there is a time where we all almost, take the step off the pedal. I'd say let everyone be safe and healthy. But at the same time, I think, this pandemic has taught us a lot of things at a human level, but even at an investment level, I think there are a number of themes that are really secular and which are catalyzed or taking off because of what's happened in the last 12, 18 months.
Ankur, thanks for that. That was pretty meaningful. Sidharth, I come to you now, sort of taking it further from what Ankur just mentioned. I think he sort of categorically said that Shrija, what he's seeing in healthcare investment is not necessarily transient, but perhaps beginning of secular themes, not only one, but various secular themes. And he also labeled healthcare as a more strategic investment now, and not necessarily from a very capitalistic lens. Of course, he's coming from a very humanitarian perspective that we have seen with the unraveling of the COVID-19 crisis. I want to sort of understand from you, Sidharth, that, in your interactions with perhaps other private equity fund managers, and given the kind of expertise you bring to the table in terms of healthcare investments, what really are you seeing in terms of investment activity? And if I were to go deeper in that question, how are you seeing that first wave differing from the second wave, particularly the pharma and healthcare sector?
Right. Thanks, Shrija. And I hope everyone watching us is safe and sound. Thanks, Ankur. I think you covered most of it. Now, the pharmaceutical sector as a sector has been the top 10 FDI attractive sectors in the country. Now, if you look at the numbers, pure number basis, the data which is available from April to December of 2020, it's 3 times more than what we got it in FY 19-20. So definitely one of the sectors which has, as Ankur also said, one of the sectors which has become the sector where importance is being played because the human life comes into play. Now, we haven't seen the June quarter numbers yet, but my experience and what we are seeing as a firm, most of the private equity players, and I'm sure Ankur will agree with this, are looking at Indian firms which are into API manufacturing, vaccine manufacturing, and the bulk drug manufacturing. We are expecting anywhere between $3 to $4 billion of investment in this financial year and going forward in the pharmaceutical sector. So in a nutshell, apart from the points that Ankur did mention, this is the sector which will continue irrespective of the wave, frankly, to attract investment the way things go. That's my view, Shrija.
Okay, so healthcare will really be at the heart of investing. I come to you now, Rupinder. Given the kind of experience that you have across various transactions, and I'm sure you must have seen crises like this before. My key question to you really is that, how has due diligence really changed in the wake of the unraveling of the COVID-19 virus? Of course, one is talking about doing deals over Zoom calls. For private equity practitioners also, it's about developing a new skill set. How do you develop trust in this new synthetic environment? So are there specific asks from private equity partners in terms of diligencing on companies? Are some of your colleagues in previous conversations have also highlighted that perhaps the entire conversation on reps and warranties is really coming to the mainstream right now. I want to understand from you, Rupinder, from the one who is putting the deals together, how has diligence changed, and then perhaps get on to Ankur on this too.
Thank you, Shrija. Thank you. And I hope everyone watching us is safe. Well, you're right. There are some changes in this whole traditional diligence that we've been undertaking. And I think particularly COVID-19 and specifically the second wave, I would say would have, has led to a situation where there are certain additional commercial and legal aspects that are being considered by PE funds. And also most of the investors, what we note are, increasing robustness of their assumptions and ensuring flexibility to deal with any uncertainty in the future, which of course, at the moment, even today, we are not certain about the future in some sense. So what we are really seeing is a heightened level of diligence in these virtual due diligence times, as I say. So talking a little bit on the commercial side first, what we are seeing is that the funds are considering more real-time projections, by which I mean real-time market analysis to determine, the future prospects, market positioning, and profitability of the target. And we've also seen, more higher reliance on deferred consideration and escrow mechanism. Now, secondly, given the market disruptions and the fluctuations in the demand and supply, which we all are aware of, investors are taking more in-depth analysis. Now, again, it depends on what kind of business you are in. But what we are seeing is more in-depth analysis with respect to the supply and the distribution chain of the target and what are the vulnerabilities, particularly in that. Another important aspect is whether the digital readiness, I would say, the existing technology platform systems support targets, business efficiently and effectively. Then talking a little bit on the legal side, I would say in-depth analysis with respect to the covenants, the indemnities, the reps, warranties, force majeure, all those aspects, and basically the ability of the target to, as we say, to perform, to pause, or terminate obligations in particularly the material contracts. Then the other aspect is the insurance policies, whether the pandemic-related exclusions, and limitations on coverage, what is the extent of that? Then one more aspect we can quickly talk about is the employment aspect, which of course is very, very critical. The health and safety. And we've seen in the traditional diligences, this was one of the aspects, but some of the analysis, some of the aspects weren't really that relevant. Lastly, but most importantly from my perspective, whether there are any white-collar crimes associated with the pandemic. So these are some of the very high-level considerations that we are seeing, which are being considered or looked into in depth. And I think it'll be good to hear from Ankur what he has to say on this. Thank you, Shrija.
Thanks, Rupinder. Ankur, I sort of want to come to you, and I think to what Rupinder just mentioned in terms of the key considerations coming to the fore from a financial, legal perspective. I want to understand from a capital allocation perspective, what are the key questions coming onto your mind? The world definitely has changed. We're talking about the next normal. The normal that we had was a weak one, which showed us our vulnerabilities. As we are moving forward, we are trying to be more anti-fragile, we're trying to be more resilient. And how are you making sure that the investments and the partners that you're getting on board are pretty clean, that the due diligence is much, much heightened, and all of this in a virtual environment? So how are you doing that?
That's a very good question. And I, by the way, fully agree with what Rupinder said in terms of just the techniques, right, that we have been deploying to kind of, in some ways, solve for the environment that we're in. I'll answer this question on a serious note and on a lighter note, right? So on a serious note, look, I think there are a few things that are emerging, right? And which is the winners or the people who have successfully navigated the last few months or quarters are either category leaders, just because they have been industry leaders, they've been able to manage it very well, or businesses that have been very agile in terms of innovation and cost structure. And when I mean innovation, I'm not talking about some past, breakthrough new product or a new service, but just, chiseling and fine tuning your value proposition, ensuring, some delivery to the consumer in these tough times. These kind of businesses have really succeeded, right? And I think this trend is not, again, a transient trend. I think there will be more and more capital that kind of is attracted towards businesses that are either industrial category leaders or people that have agile, business models in terms of their value proposition and their cost structure. So that's, at least I would say, from a general theme that, I've seen this across many, many sectors happening. On a lighter note, in terms of doing due diligence, as all of you know, a big part of our due diligence in India is actually, having dinners and drinks and coffees with entrepreneurs to get that kind of comfort factor, right? And I think now Zoom drinks and Zoom coffee has become the norm of what we do. So that's number one. But I think the almost the most interesting, I would say, evolution of our due diligence technology is given, just what Sidharrth was saying about the spurt of pharmaceutical deals that have happened. It's almost become a norm where the company or a senior member of the company will take a very swanky smartphone, walk through the plant and do like a virtual plant due diligence where there are 8 people from various parts of the world on a Zoom call, and the company is walking through the plant, showing all the equipment. And that's the so-called equipment and technical manufacturing due diligence that we have to do. So again, just speaks to things that we have to do, right? Just given in the state that we are in, how all of us in our own ways, have to learn and evolve and adapt to the situation around us.
Yeah, definitely. The reality of our times, we have to learn and constantly unlearn, and all that in a synthetic environment. Thanks for that, Rupinder and Ankur. I come to sort of you now, Sidharth. We began this conversation from a very macro point of view on where healthcare is headed. This can only be possible with the support of the head of the state or the government. And I think it's very important to sort of perhaps pose this question that what really are you seeing on the government side, especially on the healthcare investments? Do you think that necessary interventions have happened? A lot of water has flown under the bridge in terms of conversations about what the government should be doing, what has not necessarily been done. But talking from the investment perspective and really this economy piece, what really do you think are the state and government considerations, and what really have they done for this? Right. Especially to mobilize more healthcare investment opportunities. Yes, Sidharth.
Right. Thanks. Now, it's an interesting question because you always, when you speak to investors, these are the things that you always go back and look into. So I'll divide this into two, the initiatives at the central level and the initiatives at the state level. So at the central level, as you all know, the FY 21-22 budget had allocated a large amount of money for various things in the healthcare. So approximately 35,000 crores were allocated for vaccines manufacturing, and more than 64,000 crores were done for health and wellness centers. And there were approximately 28,000 health and wellness centers that was expected to be brought into play by the government of India over a period of time. Now, I won't get into as to what the government has finally done about it, but that is as per the policy initiative that the government has done. Now, even in the Department of Pharmaceutical, they came out with a production-linked incentive scheme. Now, that is expected to bring in over $2 billion of investment basis what they have provided in the production-linked investment scheme. Now, as you would know, the Department of Pharmaceutical wants the dependency to go away from importing of the pharmaceutical products, and these are greenfield projects that the state government wants to do. Now, these are, again, central government initiatives that have been taken, steps in the right direction, if I can use that word, but still a lot to be achieved and done. At the state level, let's take an example of Punjab. We've got state of Punjab, which has started with 3 pharma parks. If you look at it, very interesting thing, and I'm sure Ankur is well aware of this, that between 2018 and 2024, we are seeing approximately $250 billion of patents which will expire, which gives lucrative opportunities for pharmaceutical companies in India. And this is an exciting factor for people to consider, because globally, this is a large amount of patents which are now expiring over a period of time. Then with the second wave, and of course with the first wave, what we are seeing, and it's a talk every day, if you look at it from the data which is coming out, the demographic gap of supply and demand, or demand or supply, has to close out very quickly for tier 1, for tier 2 and tier 3 cities with respect to hospital chains. And I think that brings a great opportunity for large investments coming in through private equity players and serious strategic players coming in the hospital chains. Now, as per the data which is available, there are approximately 600 opportunities worth $32 to $34 billion worth investment in the hospital chains in the tier 2 and the tier 3 cities, which is the calling today, because unless we actually reduce the demographic gap, we don't, unless the supply chain is met, we will never be able to win this battle.
Thanks for that, Sidharth. So, of course, government interventions are happening and most of them are meaningful. I also want to understand that, all of you spoke about health in a more holistic fashion. And when we speak to experts, one thing is, of course, increasingly becoming very clear that it is moving from responding to an illness paradigm to one which is more holistic well-being for individual, which encompasses all the factors: spiritual, mental health, emotional. This mental health, of course, talking about that particularly I think is a time bomb that we are sort of sitting on. And there are various studies which talk about the mental health deteriorating levels in the millennial or the Gen Z population too of this country. I want to understand, in the investing thesis for long-term private equity players like yours, how often does the mental health conversation come in the boardroom, and how has that accelerated in the wake of the COVID-19 pandemic? And what is the opportunity set that you see, particularly in the sub-segment of healthcare?
Shrija, I think that's a very important point, to be honest. I think I would almost go as far as say that mental health is a silent pandemic that we're sitting on, right? People don't talk about it. It's not well recognized. It's not well accessed, treated. And that's why, one can never put numbers to it. But I can almost assure you that it's a very, very large share of the population. And the reality is that, again, the humanitarian challenge that we've all been through has only exacerbated that pain, right? It's not coincidental that if you look at NHS in UK, they have said that the long COVID syndrome is the number one concern of theirs post-COVID, right? And long COVID syndrome has physiological issues, but is largely linked to mental health, right? And that's just COVID related, right? What toll has locked up in houses, people working endless hours on Zoom? What has all of that done? What has it done to people who've gone through the COVID? Look, the honest answer from an investing standpoint, Shrija, is that we are investors, right? We are business builders, but at the same time, we do look for certain opportunities to be scaled up for us to invest behind. I think in almost all of these opportunities, what happens is that you have very smart entrepreneurs in our country who will see this opportunity, craft together a very, very compelling value proposition, and start a business model, and that's scaled up. I think that is happening as we speak. You see many, many businesses that are mushrooming and growing up focused on mental health. I think they will scale up, in very quick time. And then you'll see a lot of capital across, VCs, private equity, growth capital to come and kind of back this to scale this up. But look, as I said, this is, you said it's a time bomb. I would say it's a silent pandemic, whatever you call it. The reality is it is absolutely, a very important aspect of healthcare that we will need to all solve, not just from an investment opportunity standpoint, but also from a humanitarian need standpoint in our country.
Rupinder, I would like to sort of bring you in as to what Ankur just pointed out. He labeled this as a silent pandemic. I, of course, think it's a sitting time bomb that we're sort of sitting on. In your conversations with other private equity players, how much do you think that the mental health conversation has gotten into the mainstream consciousness? Do you think that there is perhaps a realization that this is a large investing thesis being built upon, just given the kind of scenarios that we're seeing building around ourselves, particularly with the unraveling of the COVID-19 virus and its implications on almost all aspects of our life?
Right, Shrija, I think time bomb and silent pandemic, some of the terms being used for mental health is true. And let me first talk a little bit about it. I think in the system itself, there are several gaps today. There's a huge shortage of even mental health professionals, the infrastructure. And now with the pandemic, of course, this issue has really come up and it's come to surface. And people are suffering from anxiety, from depression, from work from home related stress. And actually, for once, we are seeing people even talking about it publicly as well, which in the past we would not see, right? Now, in terms of what we've seen, and I'm sure both Sid, you and Ankur, everybody would be aware of it. There have been not that many, but a few recent investments in this space. One is Visa, which is an AI-based mental health platform, which is based out of Bangalore, raised around $5.5 million. And again, this is Series A financing round, which was by W Health Ventures, backed by Google. And then the other one is Inner Hour, which raised around $5.2 million in February. And again, there are a few other initiatives which are in the works. But I think it's not enough what we are seeing so far, which is there. But even the corporates, for that matter, are trying, and I can't help talking about that because it's very interesting, and we are seeing corporates coming forward and doing their own bit. So just to give you an example, Bacardi India started Bacardi Assist, which is a free counseling program for all the individuals, for all the employees. Pepperfry has also come up with something, so has Pepsi. And we at JSA, we have started a 24/7 confidential counseling helpline, which is, user-friendly portal, information, reading material on mental health, webinar. So, the corporates are doing their bit, but I think what we need is investment. What is important to consider here is the impact and the damage on the economy. If there is not enough awareness, education, infrastructure in this space, and of course, investment. The WHO had highlighted that there'll be a direct and indirect consequences of COVID-19 on mental health. And it estimated that India population, I think it said about 20% of the population will suffer. I don't have the exact number. But look where we are. Our union budget for mental health actually forms a very small part of the total health budget, which is there in India. So, I mean, I would say that to sum it up, in this world, in the COVID-19 world, mental health is the next pandemic, without a doubt. And in the near future, this space definitely should, and is likely to get more attention from the VCs and the PE funds.
Fine, and I totally agree with you that this is the next pandemic, and to what Ankur also pointed out, this is a silent pandemic that we're sort of sitting on. These are very interesting conversations that we are having as we're getting deep into the healthcare and life sciences narrative. We seem to be peeling the onion layer bit by bit. An important question that really comes to the fore is that why aren't we seeing a large health tech company coming out of India? I have been someone who has tracked the private market space for more than a decade right now. I have seen these coming in waves. I saw this entire e-commerce wave, investors doubling down it as if there was no tomorrow. So we saw Flipkart sort of emerging as the poster boy. Then we had this entire SaaS wave, which continues. And there was a fintech wave. When would we see a very large, say, $1 billion unicorn or decacorn health tech company coming out of India, just purely from India, perhaps for the Indian markets first, and then cater to the global market? We do have a company called Innovaccer, but there's more US than India, if you will. I want to understand from you, Ankur, is that something that we are perhaps missing on as media or as people? Are there some companies or some themes that are not really known yet? Also, this entire question of labeling everything as technology, real estate as tech. Every company is a tech company now. You also do that in want of higher valuations. But help me sort of understand this entire terminology about insure tech or health insurance as a technology and the role AI can play. Is it in want of higher valuations, or are we seeing some real work being done here? I know a long question, but an important one, and then I'll get on to Rupinder on that.
Absolutely an important one, Shrija. And I think you've touched two topics, right? One is, what is the true role of tech, right? That can be played and is being played within the various aspects of healthcare. You took insurance as an example. And then second, are there large health tech businesses that are emerging and growing, in our economy? So look, first, I think the first question, right? So on technology disintermediation, right? I think there is significant potential across the healthcare ecosystem. And why do I say that, right? Unfortunately, our healthcare ecosystem, as controversial as it may sound, is extremely fractured and broken, right? We have 80,000 distributors that sell through 800,000 retailers, medicines, which, fill rates in those pharmacies are less than 60%. If you go to a clinician in South Mumbai, you probably need to wait 2 hours in queue. If you're in Ranchi, or maybe a small village outside of Ranchi, you probably have to walk 2 days to see a doctor, right? So there's a clear imbalance of supply and demand here. Look at insurance, the example that you took, right? It is absolutely, I would say, unacceptable that today for all of us, right, there is virtually no insurance on outpatient. So today, all of us have to get admitted to a hospital to claim insurance, right? There are no large insurance opportunities or products that exist on outpatient. And why is that? Because there is no outpatient data, right? Nobody knows what medicines I order. Nobody knows what tests I undertake, what doctor I went to for a consultation. Until that data doesn't come, how will an insurance company underwrite my risk, right? And come up with the product. That's a dire situation. Is that changing? Absolutely, yes. I think various aspects of healthcare are being disintermediated and are being made more efficient with tech. And I think you will see many, many more businesses, and dare I say many, many more unicorns, just given the size of the opportunity in this.
Okay. Sidharth, I come to you, and I'll definitely perhaps touch upon Rupinder's point of view also. And I think it's an interesting question. Ankur very willingly and very confidently saying that I can give you insight on PharmEasy, but many more healthcare unicorns in the making, and also sort of guide upon the opportunity of this entire insurtech space and how technology is playing a critical role in disintermediating and perhaps making healthcare more affordable and accessible, the real purpose of what the sector should really do. What really are the kind of sense and on the ground opportunities that you are seeing, Sidharth?
Right. No, congratulations, Ankur. I like to just add to this, Shrija, in a way that one of the things is the medical devices sector. Now, that's the sunrise sector of the country because of the low entry bar as compared to other sectors. We've seen that this sector is worth $11 billion today, expected to be $55 billion by 2025. It's one of the most vibrant, diverse sector with more than 250 organizations working on healthcare innovations and medical innovations. So from my perspective, and I've seen and I've done some of the largest deals in the MD space. What I'm seeing here is that from a VC and a private equity perspective, e-commerce in the healthcare, which is edtech, health tech, or fintech, is the investment hotbed. If you look at it from what we are seeing in the current investment spree. One more thing which becomes very interesting is how we looked at things pre-pandemic in the health tech space and how do we look at things post-pandemic in the healthcare. And it's very interesting. Pre-pandemic in the health tech space, what we were seeing was innovations. We were seeing a lot of innovations in the gadgets, in the diagnostic centers, and wearable gadgets were coming in, but that was more on the lifestyle changes. But what has happened in the post-pandemic, and more particularly when you see between the first and the second wave, is that the entire thing on the health tech is moved into, Shrija, very interesting stuff of including emergency care. They're including health tech variables to even check your lifestyle problems. Like, for example, there is a new tech which has come with wearable watch where you can actually check your oxygen saturation level, which is the new thing which has come in the last 2 months. Now, that wasn't there before the second wave came in, but this has become the new thing in the second wave. We've seen AI becoming so important. We've seen robots becoming the next big thing where they assist COVID patients in delivery of foods and other things. Even Indian innovations is in the ventilator space is very high. So for me, when I see the medical devices space and I see the 250 organizations actually working towards medical innovations, I think, as Ankur said, this is the next big thing, and innovations will carry on. The VC and the private equity and the growth fund will look at them as the investment hotbed. You can't ignore that.
The last question, and a pretty interesting one that we are seeing, this heightened hyperactivity from the VC world and the private equity world in allocating capital. I mean, 12 new unicorns, we just sort of begin the financial year. One can really argue that this is all coming at a time when the world is awash with capital. Perhaps the interest rates are too low, SPACs are happening everywhere. We are moving into a too easy scenario of deal making over Zoom call rather than in-person meetings. So what really is happening? This unicorn obsession doesn't seem to really end, both from the sides of the investors or the side of the people who are starting these startups. Are we sort of really moving ahead of ourselves as an industry? That's my first question. The second question is that with so much really happening, why aren't the investors still not using the B word is my big question. Why aren't we still so reluctant to use the B word and say it is the bubble? And I will sort of first begin with you, Ankur, and then get on to Rupinder on this.
Yeah, Shrija, it's a very good question. Look, I don't think anybody is hesitant to use the B word, right? I think, look, I'm a big believer of overall market wisdom, right? I don't think this is a herd phenomenon, right? So I wouldn't go as far as to say that. What's the first leading indicator of whether this is getting into unsustainable zone? It's multiples, right? Is the valuation, whether it's a unicorn or decacorn or whatever it is it driven by valuation multiples? Is it driven by earnings, right? I will admit that valuation multiples in many parts of healthcare have run up, right? But are they completely unjustifiable, unsustainable? We'll see. Because look, don't forget, Shrija, that there are also, as I said, some secular shifts happening, right? So if the secular shift means that the opportunity for the next 10 years will look very different from what the opportunity looked 5 years ago, right? And that does justify a different multiple. So I would probably very strongly tell you that this is not a bubble, right? There is a lot of capital going into every aspect of the economy, right? And certainly healthcare. But look at our economy, right? I mean, it's a very simple thing. If the government of India wants to make this a $5 trillion economy, it has to come also from private markets, and you need to have many more unicorns and decacorns to kind of serve that economy. So I wouldn't go as far and say it's a bubble. Yes, valuation multiples in many parts of healthcare have run up, but I would say some of them is just a reflection of the secular shift that you're seeing in various aspects.
Okay, fair enough. Rupinder, I come to you now. Ankur very categorically denying that there's no bubble. The opportunity set is very huge. And if India is set out to be a $5 trillion economy by 2025, you will have to see cases of unicorns and decacorns coming up. My question to you really is that, how sustainable this is, the trajectory that what you see, and also the question on valuations, how sustainable they are really.
So I think, well, as Ankur had mentioned, right, it's just a pause right now, what we are seeing, and may not be just a issue of a bubble. Well, India is, as we read, right, India is likely to have 50 unicorns by the end of the year, or by early next year, we could say now. The timing it keeps changing. And the investments in certain sectors, specifically the digital side of it, and on the health tech, which I mentioned before as well, is something which we are going to be seeing, even despite of the the turbulent times, the conditions that we have seen in the very first quarter of this particular year. So, I mean, I would say that despite the uncertainty, and of course, Ankur is better placed to confirm that, but this is the time for digital and AI in healthcare. And I think the trajectory in general is expected to remain steady.
Okay, the trajectory is expected to remain steady. And I think there's a lot of optimism coming on the board.
A lot of optimism.
All optimism coming on the healthcare. And I would say it is not cautious optimism. It's like, just go all out for healthcare is what I'm gathering, because as all of you sort of pointed out, that there is perhaps a very secular shift happening in the entire healthcare conversation and where we are in the country talking about healthcare. Time for some rapid fire here before we sort of end this entire conversation. I'll begin with you, Ankur. If you were to sort of give me one deal that happened in the recent times, which you wish you would have done, and you were very impressed with it.
Oh, that's a good question. I would say probably one of the CDMO deals that have happened, right? So a couple of them have happened, but I would say that that's a space that we really like and we wish would have done something in that space. So that's certainly one I would say that we've missed and would have loved to do.
Okay, and one of the most humbling experiences that you've had in the COVID situation, what would that be?
Actually, more than many, honestly, Shrija. I think, look, as some of us who have the network, the resources, the connections, just it's heartbreaking when people reach out and you're not able to help, right? You realize that this pandemic, sees no ethnicity, sees no income criteria, sees no geography, right? Nothing, right? And you realize that how helpless you are despite everything to treat some of your near dear friends or people around us. And I think that by far has been the most humbling experience for me personally, given just I've spent probably all my life in healthcare and I've just realized that, how inept we are despite all of this.
Okay, Rupinder, I come to you. How will women remember this pandemic? Pandemic has been gender neutral, but has impacted women more than men, clearly. Because they're caregivers, they have had to perform the dual role of working at home, working for office. I want to understand from you, 5 years from now, how will women look at the pandemic?
You've actually asked me, one of the most important and sensitive question, because I've always felt that pandemic is actually going to change the world for women in a big way. And with the experiences that women have had, that they had to work out of home, and somehow when they are at home, they are expected to take care of everything, multitask at the same time, manage everything, and at the same time, you're expected to give your 100% to work. So we've already seen numbers, very depressing numbers, where we've seen that a lot of women are looking at not coming back to work. So while here, I'm always working on or focusing on women empowerment. When I see and hear these kind of things, it's really sad. Not everybody is privileged that they can manage their, whole life at home. And this pandemic has also kind of pushed them into the background. And I would say 5 years from today, the numbers are going to go down. Women are going to go back a little. But what will be important is to see how the companies, the corporates are going to work in getting them back to work and ensuring that they have the infrastructure and the support which is needed.
I agree.
Okay. Sidharth, I come to you now. What really have you Netflixing these days?
Me? Netflixing? Well, I'm not too much into movies and things like that. I'm more into my reading and books. So you can ask me which is the book I've read, and I'll be happy to tell you that. I have consciously tried sitting at home because of the pandemic not to put myself too much near the television and get addicted in any manner. So Shrija, I would pass this, but I'm definitely more.
So what books are you reading? So
I like reading a lot of political books. I like to read books on politics. But recent one is the history of a Parsi lawyer in England who moved out from India and was settled in Britain, and how he suffered racism in the early 18th century. So very interesting book. So I'm reading that right now. But I keep reading. I have 3 or 4 books which I always keep next to me, which I keep reading and shuffling with me.
Okay, thank you. And thank you, Sidharth. Thank you, Ankur, and thank you, Rupinder, for sort of putting your time and energy to this. We had a very meaningful conversation and a lot of interesting insights came to the fore. Thank you. And before we sign off, wishing you and yours a very healthy and positive 2021. Thank you for joining in.
Thank you, everyone. Thank you.